spend some time talking about the new version tonight and some of the features. I did that training the other day, and I just realized there wasn't enough time to really cover everything that you know I would like to cover. Because there's a lot of new features or some changes to the software that really makes it, in my opinion, understanding what's happening in the market a bit better. And forget about what's the volatility of the markets. I know I see a lot of people, it's impossible to trade these markets because it's down 0.5%, 1.5%, then it goes up positive on the day, then it goes back down. Well, that's where watching the order flow is going to come in handy. And I'm going to spend some time talking about some of the newer settings. So for now, what I'll talk about first is I'll talk about the value areas, right? Because this is something that I've been wanting in there for quite a while, and it's just been hard to do, efficiently. I mean, I could put it in, but it would have made it slower. Till my programmer, really dove in deep with NinjaTrader and figured out, the way to do it efficiently, because value areas, right, are areas that you're always looking for the market to come back to. And, sort of in the past, I sort of a crude way of me doing it was, I'd use these volume profile tools like this that, like over a 5-minute period, or I even have tools, where you can draw from, any period. You've seen those things where you can draw a volume profile out over a certain period. And what I really wanted was something that I could draw out, sort of like the virgin point of control or virgin value areas, areas that aren't tested in the next bar, because oftentimes, the value overlaps, right, from one bar to the next. Okay, it just goes, you can see, since we put the value areas on here, right, you see where the value areas in a bar, and generally they overlap, by at least a tick. Sometimes they're inside the previous bar, and obviously sometimes, they're like this, the next bar overlaps it by 4 ticks or something. And these are areas, when you have that one sort of left off, that are great areas where you're looking for the market to come back and test it. So this is just the E-mini 1-minute chart. We'll just go back to the cash open. Where's cash open? 8:30, and like you see, right, oftentimes they're overlapping, right? They're overlapping. Now, just sort of down the line, maybe in a separate thing I'll do. One of the things that I like to do, I don't have it on this PC yet, because I'm working with a programmer on it, because he's got a tool for drawing out, it's one of those volume profile tools, right? And I like to take it from like swing highs to swing lows, and you see where the value areas come out to, but that's somewhere down the line. But for now, dealing with these areas where the value areas are coming in to be retested, right? Like I said, every bar, it tends to be retested, right? Retested here, this one's retested, this one retests the previous one. This one doesn't, right? It doesn't. The next bar, the value area is higher, right? So we know that the market is, we can see the value areas obviously moving higher, right? The value area high is higher here, higher in this bar, higher in this bar, higher in this bar. Okay, so we already know the market is starting to trend up. Obviously, point of controls are going up, delta's going up. You got a little delta surge going on right here. And of course, point of control is going higher. Now we are up here, right? And we don't come back in and test this point of control. So we have that area in here, this area between 43.36, 43.33, okay? And then the next bar, so we got one bar where we haven't come back into the previous value area. Okay, now we got another bar where it hasn't come into the previous value area. And it's starting to trend higher. Okay, so I know we're already trending higher, right? When I have two of these virgin value areas, so to speak, that's a good sign. I know the market is moving higher, right? Because oftentimes you're going to have a gap in the value areas, right? And when I have a gap in the value, right, from this bar to this bar, right, the value area high here to the value area low here, this is a gap, okay? You see another gap here. But when I start seeing the gaps like this, I know the market's got a full head of steam. So the market is going up, right? So I know I got this zone drawn out, this zone drawn out. When I have two in a row like that, it's generally pretty clear which way you should be on the market, right? You shouldn't be looking for an area to get short, right? Because I know I've got an area here that could act as support. I have an area here that could act as support, right? So we trade higher. We hit the new high of the day up here, 56, what was that, 56 and a half? Okay, we start coming down. All right, so where's my target going to be? It's going to be this first area in here. Start coming off. I got, again, value areas are generally retraced into in the next bar, right? All these little value areas here get retraced in this big bar here. Right? Then we got a new value area up here, but the next bar is trading within that value still. Then the next bar is still trading within that value. Market starts trading down. We got this big exposed value area right here. Okay, next bar, it's below it. Okay, that's a good sign. We got a gap here in the value area. Where'd it come back? Yeah, next bar overlaps the previous bar, right? But still hasn't traded back in there. This third bar, it trades back in there finally, right? Trades in there by what, one tick, right? And then it comes off lower, lower, lower to where? Right into this previous value area. Market rallies up a little bit, you know, from this 38 area all the way up to mid 40s. Comes off, gets through this value area that's already been tested, trades down to where? The previous value area, right? And then it bounces back up. Okay, and it comes off. Now, here's I didn't have a chance to talk about this over the weekend, but this is a bearish value area, right? It's in the red bar in a sense. That's why it's kicking it off red. If the bar is green, the value area zone will be green color. If the bar is red, and this is a red candle, it will draw a red zone out, right? That's why you have red, red, red. This one is a green, okay? So, but what's happening in this bar, right? Well, the bar traded down, reversed up, but it's still closed red, just by the sort of the smallest amount, the smallest margin by about 3 ticks. Even though, this is one of those bullish candles, the candlestick guys, the hammer pattern, right? And I do, if this bar had turned green, this would be a nice bullish bar, but it's still red. But you're still drawing out that zone. And oftentimes, people see things on their chart red or green, and they think, traffic lights, red light, you do one thing, green light, you do another thing. And, this is where using your brain is got to come in handy. Okay, you have a small red candle, okay, even though it's a reversal candle, right? Point of control is near the bottom, which is, if this candle was green, that'd be probably a prominent point of control. And then you just have this, and people think, well, I should be getting short, right? Well, if you, just like you would for an imbalance, right, a stacked imbalance, if you have that red zone drawn out and you're trading above it, it's invalidated. Okay, maybe in the next version, maybe I could ask the programmer to put a feature in there to undraw it, right? Because you're trading above it, but that's not really what you want to do. You should be able to recognize that just by seeing, well, it's, we're trading above the resistance area, right? So it's invalidated in that sense. So I'm not necessarily looking for it to come back down and test it here. All right. Then we got the little green candle, the next one here, with the little zone. It goes a little bit higher, then it starts coming back down. It's a little tight in this area in here. All right, but I'm not looking at this necessarily as being support. I mean, you can, but that's not, I'm not one of those in that sense where it was bearish. Now I'm looking for it to be bullish. I would just treat it as invalidated. Market went up, right? It just traded straight through these previous zones. Okay. They're not all going to work perfectly, just like did here, here, and here. And you get up here, people say, well, why is this one drawn out as gray? That's because the candle is a doji candle, open and close at the same price. So it's not going to draw it red, or it's not going to draw it green. Okay. I mean, you had this small green one in here, right? Where it came out, just the next bar was above it, and this gray bar, this doji candle, traded into it. Then it rallied up to that new high there. Okay. Now, right now, I'm just covering the value area ones because that's all I have set on this chart. And it gets down in here again. This candle is kind of similar to this red candle earlier. Obviously, the only difference is this is a red candle, this is a green candle, and the point of control is towards the bottom. But this candle is green. The whole value area is below the previous bar's value area, just like here. Again, some people might be willing to take this as support. I wouldn't, right? It's just, I'm not wired that way. If it's a green candle, yeah, I would take it as support. As it came down in here, again, it traded in here, traded in that area, bounced up a little bit, wasn't a big move. Honestly, this type of market, they don't look like big moves, but you're talking a move, just, the high is what, 32 and a quarter, up to what, 737. So, it's almost a 5-point move, even though it doesn't look like much. Then you start trading down. Again, similar thing that you have here on this bar, right? It's that red candle. Point of control is towards the bottom, right? The value area is below the previous bar's value, but it's a red candle. So I'm not looking at this to be support. When I have a red candle and I have the zone drawn out, I'm looking for it to be resistance, right? I expect the next bar to be trading below it, just as I would for a stacked selling imbalance, right? There are times where, I don't know if I stack selling imbalance here. Let's take a quick look. So for example, okay, like here, right? This is a stacked buying imbalance, right? I don't expect the next bar to be below it, right? If I'm taking a stacked buying imbalance, I expect the next bar to be trading above it. Like you have, down here, here's a stacked buying imbalance, right? The next bar should at least be above it. If the next bar is trading below it, like it was doing up here, that signal is invalidated right away. I'm not looking to do anything on that type of bar. So here, right, so you have your zone being drawn out, right? It goes 2 bars, then the third bar trades right into that zone, and then it sells off, right? So now I got a green candle, right? Got the green zone. Even though the market sold off and came back up, it's a green bar, right? With a green zone, I'm expecting the market to be above it, right? Not below it. So even though you have zones drawn out, right, you still got to sort of put the pieces together, right? If it's a green zone and you're looking for the market to come back, you're looking for it to come back from above, not below, even though in this case it did come back up to here. But again, if you're selling it in here, it still kept coming back and stopped you out. The best way to trade it is if it's a red candle, look for the market to start moving down and then come back up and test it. If it's a green candle, right, you're looking for the market to go up, then come back and test it. Right, like here, right, the red candle, right, the red candle, the red zone. Markets sold off, came back up, tested it, came back off. Again, doesn't look like much, right? I mean, if you're selling it just right here at the top of the zone, at the bottom of the zone, that's what, 23, and 2 bars later, it's trading 16. That's, that's what I can add. 7 points right there. But again, 5 points is good enough to get out of it. What's your risk, right? You're just selling it right here at 23, maybe a stop, 23, 24, 20, or not you're selling at 23, put a stop up there at 25, 2 points, to get 5, 6 points. That's what, 2.5, 3 to 1, just like here, right? Even if you're just putting a stop in right, or sorry, a short right in here at 20, yeah, it pulls back up to what, 22.5. And then just sort of goes sideways. Another little zone here. Now, personally, I prefer to take these zones where they're drawn out a couple of bars. If it's just one bar, it could be just the market starting to go sideways. Personally, I just find them a little bit more effective when there's space in between. But again, an issue when you're dealing with space in between is if the market has a strong sell-off and it starts rallying, it could keep rallying back up before it sells off again like it did here, right? It rallied. The bottom of this zone, we're looking at 17.5, rallies all the way back up to the other side, 19.5, gets all the way up to 22.75 before selling off, right? Then you got another zone, right? It's below. That's what you want to see, right? It's not just about, well, okay, I have a zone here being drawn. I'm going to wait for it to come back to take the trade. You have that spot, okay? One way to trade it is for that pullback, right? Another way is when you see things happening in the order flow, right? When the order flow is, what do you want to say, conducive, when the order flow is, in this case, bearish, right? Then you're going to be trading in that direction, right? You're not looking for a buy yet, right? If you're under here, right, then you start seeing the bullish things come in, the bullish prominent point of control, okay? You're starting to see point of controls move higher. You're getting long. Even if you're getting long, you have this resistance here, right, for the market to come back, get to that area up around, 17, 18 in here, okay? Unfortunately, that's going to be your resistance, right? Your I don't want to say target, but it's going to come back up into that area and it has a chance to sort of just rotate around it, which it did. I mean, even though it traded a little bit higher, it more or less sort of hung in that area and traded sideways, right? Now it comes back here. Right now you've got that bearish zone coming in. Let me expand this chart a little bit here. Okay, so we have this zone and the next bar, again, it's a red candle. And again, this is the type of bar that candlestick guys love, right? It's a hammer, right? You got point of control, the bottom half of the bar, the whole value area is at the bottom half of the bar. Problem is it's still a red candle, but it trades up to the bottom of that value area by, it's one tick away. What do you have? You have that exhaustion print there, the 5, right? Okay, doesn't even get back into that zone. Next bar, just same level, right below it by a tick. Then you got the bearish slingshot, right? So that you have this area up in here, right? You don't have to sit there and wait, for one later in the day if it comes back to it. You have that area, and when you have an area like that, the market can and often does move away from it. Right now, it could just have 2 bearish things and third bar come right back into it. Okay, but you have a potential for a move to happen. Okay, so it's not just buying, trading the pullback, buying the dip. You have that potential for that move, right? And now you're starting to see you have that big bearish signal going on right here. You got the exhaustion print when you tried to come back into that area. You come again, next bar, you come back into that area. You've got the bearish slingshot POC, and the market had a nice sell-off, right? Even if it's just you sold off to here and it starts coming back, you're thinking, you're gritting your teeth, hoping, oh my gosh, don't come back, up higher. It gives you that bearish prominent point of control right here. Okay, I can stay in the trade, right? Comes down, makes that new lower low from earlier right there, right? And it just keeps working its way down, 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 down. Even the few bullish signals that you got, right? Bullish EVA right here. Okay, so we got bullish EVA here. So you've gotten long. Well, the next bar didn't go any higher. Neither did the second bar after that, right? Whenever you have like these bullish signals, like a bearish slingshot POC or a bullish EVA, you need the next bar to have that follow through order flow, right? You need it to still keep going up in that direction, just as going down on the bearish signal, right? Preferably in the next bar. If not the next bar, then the bar after it. I usually give it 2 bars. Once in a while, if it's a slow market or if it's at night, evening session, I'll give it 3 bars. Because a lot of times at night session, well, except for the last week, it's just not much activity. Now, so to get no bullish follow through order flow here, got no bullish follow through order flow here. Okay, so there's been a couple of times that you're expecting this market to rally and it couldn't even muster that rally. I mean, look at this bar here. Nice strong positive delta plus 1200, 1243. But the next bar couldn't even go any higher, right? It just stayed inside the previous bar's value area. That's not bullish, even though this bar had nice bullish delta, even though this bar had nice bullish slingshot point of control, it didn't do anything. It didn't go higher. And in the end, all you ended up with was this red bar, but a red bar with a exhaustion print, 4. Okay, and then the market keeps trading down. I mean, we came back to this 42.96 area, right? We have the zone. I don't know if you could see it on your chart, but it's a zone from way earlier. I forgot what time it was. We rallied in the morning. Went all the way back. Here. That's from 4 in the morning. Okay. Came all the way back until, that's what, 11 something. Oops, here. Came back into there, 96. This is 96 right here. I mean, it rallied up to 02. So it rallied. It wasn't, it didn't bounce for the whole day and rally up to new highs. It did bounce off that level and then just sort of rotate around, just sort of went sideways, sideways, sideways. Then you get down here, now you have a bullish EVA. That's why it's blue color, right? The normal value area, if it's green, it'll be green, a normal value area if it's bullish. If it's a bullish EVA, excuse me, it'll be blue. Now, if it was a bearish EVA, it'd be a darker red because the normal red, if you were to go in and change the colors in the settings, just pull that up here. So if you were to scroll down, put it up here. All right, the EVAs are blue and red. The normal value area zone that's going to be drawn out is red and green. If I were to, if you want to keep it, but it's going to be a darker red if it's a EVA because the opacity is set to 50 as opposed to set to 20. And again, maybe you don't like the color scheme, you can change it, right? So if you don't want the zones, drawn out red and green, you could change it to whatever color, pink and yellow. It's up to you. You could change those. You could adjust those colors. Okay, so it pulled back, got within that area right up to the upper level of this bullish EVA, and again, doesn't look like much of a move. It's sad, S&P's used to be such a nice, calm contract to trade. It doesn't look like much of a move, but it's moved from 95 all the way up to, it's almost a 10-point move. It's like 9 points. And then you have 1, 2, 3 bars, right? 3 bars with zones being drawn out. Now, what did I say earlier, right? Earlier you had 2 greens in a row. 1, 2, 1, 2 now, right? 1 bar. The immediate next bar, it's not 1 bar, then nothing in the second bar, and then the third bar. When I see 2 in a row one right after the other. It's a trade that I know which way the direction is going, right? I don't need to wait for a third one to come in here, be looking to get short. For me, I know I could get short here, and my stop is just above the first one, right? And if you start trading in there, but I'm still loving it, I know I got another resistance area, because now I know I got overhead resistance right above me and right above that. All right, so I know that I've got some, there was selling in here earlier, that if the market came back up in here, that selling is probably still going to be there. Then you put in the third one here, so we're gap in the value here, gap in the value. And I've talked about this a long time ago, right? When you're seeing one gap, two gaps, it's usually gap and go, right? Gap trading strategy, two gaps in a row is good enough to get short already. Now we're adding another feature to make it a bit clearer, is you're seeing this zone drawn out. Okay, well, I know I got one gap here already. I've already got another zone being drawn out. I know I could just hide behind here, right? Because I've got this whole area up in here. So, you can wait until it gets down in here, right, till this bar closes. But if you're a little bit more aggressive, you think you could just get in right away, in this bar, because I know I'm already forming two. Okay, so there's a chance that I'm already below, because again, this is a 1 minute bar. So, chances are halfway through the minute, it's already trading down here, but I've already got strong signs up in here. Well, S&P's dropping right now. Because I want to take advantage. This is the bar that you want, right? These are those bars that, you get in and your take profit is hit, within 10 seconds, right? Those are the type of bars you wish, I wish I moved my take profit. But, those are the bars that, you get in and filled in the same bar that's, filled with your take profit, not your stop. Those are the good trades to have. Okay, so anyway, the market came back. Where did it come back to? It came back to this level right here. Right? It got through it by 2 ticks right here, 95 3/4, 96, and then it had a nice move down again. Right, this whole time, right? There's, it's all positive delta, right? And you're thinking, okay, maybe this market could rally. Here, you got a nice trade setup. This is the trade setup that I like. I like the bullish EVA with the slingshot point of control in it. Did it go higher? Yeah, it went higher, 2 points, but I know I got resistance here now. Now I know I have this area. It's clear to me that, yeah, there's this area right here that is going to act as resistance. So even if I'm getting long in here, I sort of got to grit my teeth and, I got to get through this area. I got to get through this area. I got to get through this area. I know I got areas that the market could struggle to get through, at least for now, right? So the market did what it did, right? It came right back up into those areas and then sold off again. Sold off nicely. Okay, now here you've got these two red bars with the zone drawn out. But again, what is it? It's a red candle, but we're trading above it, above the zone, trading above the zone. So it's invalidated already, right? Bar closes up, bar closed up. Those zones are invalidated. Okay, so I'm not looking for these zones to be support, because they should be resistance, but you're trading above resistance at that point. Then finally you get another one right down here. Now this is not a bearish EVA. If this bar had a lower value area than the previous bar, it's right at the same level, so it's not giving that signal. Okay, but it's still a slingshot point of control in there, which is bearish. I have a zone being drawn out already, again, which is good. And I'm still trading below it a little bit, 4 points below. Rally back up to where? Right back into that zone. Okay, and the market sold off again from that zone. Whoops. And again, it's not like you have to, you put an offer in here, you can manage the trade with a stop just on the other side of the zone. And if it trades through it, Okay, I mean, we wish every zone would hold, but sometimes this is what they do, right? Because what happened? Sold off into the previous zone here, that was support, rallied back up into that zone, and then sold off. Right? And I'm not saying you sold it right here and covered it, sold it at, what is that, 75, 76, and then covered it down here in 63, 64 at the low. No, I mean, you would have sold it up here at, 76, probably covered somewhere down around 7, ideally 70. Because again, you're going to look for the market to at least come back down into 71 and a half. So from, 76 down to 70, 71, 5 points. Okay, then the market started working its way up. You get up here, right? You got a nice zone being drawn out here. You test it, you come within one tick, rally back up. Okay, you got another zone, but again, it hadn't come in here yet. Another zone formed here. Again, you try to buy it in here, the stop just on the other side, you get stopped out, you come down here. Again, this trade fails. This one fails here too. So you got 1, 2, 3 losers. And I showed you some really nice trades, but sometimes it just overshoots it. Okay. Then you sort of have this one forming right in here. Right, next bar, again, we get within one tick of it, then the next bar trades in and just sort of hangs around, doesn't move much lower, unfortunately, even though it tests that area. It's a big zone in here. And then we're sort of coming up later in the day. Now I have these zones here from way earlier, way, those were those two from, when we had the 2 in a row right here, came off. At this point, you know the volatility is picking up. How can you tell the volatility is picking up? Well, you look at some of these bars. I mean, obviously this big bar here. I mean, you're talking a range of 71 and a quarter, so call it 71, up to 91. So a 20-point range in one bar. Now, when you start seeing bars like that, right, something's amiss. And it was, Biden. It was 2 o'clock presser that changed to 1 o'clock, then did it at 2 o'clock because there's an hour delay or something like that. It's, you know, it's kind of bizarre the way this political scene is now. But the volatility is picked up, and if volatility is starting to pick up, be careful trying to trade zones. Zones work great in normal market conditions, but when sort of the monopoly board is thrown off the table, things can get wild. That's why it's not uncommon to start seeing, when you start seeing the levels getting blown through, right? I know things are picking up already here. Even in this bar is about a 10-point bar, 81 up to, what is that, 92, right? It's over 10 points there. And then I've got this other bar here already, right? 94 down to 81. So, another 13-point bar, and it just blew right through that level. Now I've got 2, 1, 2, okay, gap here. We're trading way up here. Now, I know volatility's picked up, right? I know I got gap here. I know I've got new zones, 2 new zones here. Okay, and we just came and blew right through this level here, right? This is a nice bearish bar. It's a bearish slingshot point of control, that red point of control. And the zone is red, the value area is red. Okay, so I know that's a bearish bar. It did sell off, okay? And then it just turned on a dime and rallied straight through that in one bar. Didn't just, oftentimes you're going to see the little rally come back up in here, sort of go sideways. It just blew right through it, and it blew through it. More importantly, look at the volume. It was very light in there. 1 against 51, 3 against 41, 11 against 17, 31 against 17, 5 against 14, 12 against 20. So I know the market's moving fast. When I see volume like this, again, S&Ps, you should see several hundreds being traded. You're seeing a lot of these bars with volumes in the teens. So there's not necessarily a lot, even though the total volume for the bar is decent, 3,000, 3,000, 4,000, 6,000. It's taking the market more price levels to transact trade, basically, right? Because it's looking for liquidity is what's happening, right? People are just buying whatever's there. In this case, now they're buying whatever's there. That's why you have bars that are 15, 20 points. So at this point, I'm not looking for these areas to be holding anymore. I know I just blew through this level easily on very light volume, cutting through that level, right? Because normally you should see regular normal size bars. I hate to say normal size bars in the S&P being 10 points, but you know, something manageable with volume. But you're not seeing much volume go through. You know, when your imbalance is only 41 contracts, you know there's not a lot trading on the other side. And in the S&Ps to have a imbalance, you know, 4 against 27, 1 against 10, that's not normal, right? You don't normally see that lack of liquidity in the S&Ps unless something is happening. So I'm not looking for these levels necessarily to be holding already because I've already got something very bullish going on in these two bars. Okay, so then the market just blew right through it and obviously continued higher. So if you take away one thing today, look for these bars where you have the two consecutive, in this case, if you're using the value areas, where they're being the zones drawn out, right? You don't need to necessarily wait too long, right? Especially if you see the gap like that, it's pretty clear, right? And if the second bar doesn't even come in anywhere near, right? It's way above. It's almost, you know, one of the things I wanted to talk about probably in the future is I want to talk about these value area highs in one bar versus value area lows in another bar. And when, you know, just really briefly, you know, if you want, you know, if you're bored one night and can't sleep, take a look at it. When you have a value area, okay, so if you have two green bars and the value area high of bar 1 is not tested by the low of the previous bar, that's usually a good sign to get going with that trade. Just as the opposite would be true if it was two red bars. Let me see if I can find one in here. Well, it's probably right here with these two here, right? If the value area low of this red candle here is what, 4301.5. The high of this bar is 01. So you have a gap between the high of the second bar and the value area low of the previous bar. Just like you have here, right? It's just right on the edge, 99.25. It's the value area low. Here's 99. Also in a quarter is the high. So it's just right at the same level. But when the high of the second bar, if it's two red candles, doesn't get into the value area low, right? That's usually a good trade to take. It gives you, you know, it's a directional clue, right? You're always looking for these directional clues in the market. But anyway, I sort of digress. All right, so let's go back here. Okay, so, you know, the market just steamrolled ahead, up and up and up. Now things are calming down, right? S&Ps are sort of back in their, again, I don't want to say normal, but you know, you're talking a range, you know, 03 up to, what is that, 10, so 7 points. Again, you know, the bars are a bit normalized now, you know, 10.25, you know, 16.5. And now you're starting to see, what time is it? It's already 2 o'clock. This zone, you know, this zone didn't hold, went up, came down. We got a new area in here, and just sort of what I talked about earlier, right? You have the value area high of this bar, this green bar with the zone being drawn out as 15. The low of the next bar, also a green candle, so green, green. The low is, you know, 15.25. So there's a gap between the value area high here and the low of this bar right here. And then they kept going higher. We went all the way up to, what is that? So, you know, this bar closed at, what is that, 18.25. This bar opened up 18.5. Traded all the way up to, what is that, 20 up to 30. There's that big size up there at 30. here over 2,500. It came, so it tested there, right? Bearish prominent point of control, right? It's right on the extreme. Obviously, it's a bearish ratio telling you the stopping volume there. And the market came off a little bit. Like I say, a little bit, but it's a move from all the way down to what is that, 18 from 30. And then it's going to come back up and test it once, twice, finally the third time. We get through it, right? And again, people they see that size, it's mesmerizing, right? You see big size in the market, how many thousands are there? Sometimes people sit there and they wonder, really is it 2,500, 3,000, 5,000? So it turned out to be about 3,500, and it came back up and finally got through it. But what did it do? It got through it by 2 points. Okay, but along the way, okay, so we have this zone being drawn out here, this zone drawn out here, came back in, tested it, rallied back up. Again, even though you have this green zone, right, we're trading below it, right? So I'm looking for green zones to be support, not resistance. All right, so we trade back into this zone, 22.5, rally all the way back up to 30, where we have that level, finally get through it, leaves off this zone up in here, right? This was an area up in here of 30, 42.50 last night after the reopen. The low was interesting. I'll talk about that in a second. Then the market started coming off again, came down, tested this low. Now it's 230, right? Where cash closes at 3. Blew through this area, rallied back up, got right one tick into this zone, and then started trading back down. I blew through this level here. Right, if you're looking for that resistance, it just wasn't there. But it tested the next one. The next one held, and then it sold off again. Again from that 28 area all the way down into the teens, leaving another zone right here. Came back in, rallied back up into that zone. Right, 21.25, held it. Same bar, right? From 21.25, literally down to 12. What is that? 11.5. So it is a nice move from 21 right back down to the 12 basically in that one bar. Now we're coming up on the cash close here. And no more zones. You have that zone from way earlier down here, 42.90 is a big zone. Now, one of the tests that we've been doing research on is the bigger the zone, the stronger the zone, and so far it's inconclusive. Because we're trying to figure out what exactly considers a big zone, because some markets, like in the S&Ps, right, this zone that's being drawn out is what is that, 91.5 down to 83.5. Okay, well that's a lot of risk involved. If you're buying it somewhere in here at 91.25, even the upper 91.5, you're risking almost 10 points. Because your stop would be on the other side, 82.5. So that's 9 points. I don't know if a lot of people really want to do that, but some of our tests have shown that sort of the bigger the areas, they tend to hold a bit better. But at the same time, since it's a bigger area, you have more space. Okay, so it's one of these things that I got 10 points, I got 9 points of wiggle room, right? And 9 points of wiggle room is a lot, as opposed to a tighter zone, right? In here, you're talking 70 and 3. Was that 70.75 or 21 to 24? 3 points, right? It's a third the size. Okay, so your stop is much neater, right? It's only 3.5 points, whereas here, you're basically your stop is almost 10 points, right? And it's one of those things where, you know, I see people, they have zones sometimes drawn in NASDAQ that are 50 points zone. And it's like, oh yeah, my level held. Well, your level's 50 points. You know, it should hold. You know, it could go down, you know, you're buying it at 90 and it trades all the way down to 50. You know, that's a lot of risk to be taken, but whatever.